What's going on, everybody? I am Antonio, the realtor, and on today's show, we are going to talk to Cece out from the Detroit, Michigan area. She is with Cross Country Mortgage. She is a lender. She's been a lender for the last 6 years, and we're going to get some very, very good information from her when it comes to um, divorce, okay, and how it relates to lending. We're going to talk about first-time home buying, and then as well as VA loans. So, Cece, welcome to the show. Thank you so much for being here.
Well, thank you for having me on. This is a great pleasure starting our day off together, talking about something that we both really care about our family and friends that we serve. And with the divorce aspect, this is a really heavy conversation and emotional for our clients.
Absolutely. I get phone calls all the time about, "Hey, Antonio, do you work with divorced couples?" And it's like, "Well, I'm a realtor. Divorce happens all the time." And the cool thing about the team, at least for me, is that I do the deal with my wife. So we're both on the same real estate team. So if it's the husband that's calling and he's like, "Hey, I want to, we got to sell our house because we're getting the divorce," I show up, have the wife there, and then we feel out who should be doing the talking between, the future divorcees, right? And having that team really helps. But having a lender that understands and who can relate to what that process is going to look like for somebody, I think is worth its weight in gold. So why don't you tell the audience a little bit about what you went through and how you see it helping in your career?
Well, right now, the biggest thing is to have as I spoke before, not have a transaction type of real estate process. This is human to human. This is a big thing that's happening, and organization is the key to when we start discussing divorce. There's one or two, or if you both are amicable, or if you're not, one typically starts organizing a little bit sooner than the other. And the house is a big topic, and it's contentious as well. So when you start thinking about it, there's one question, but three answers. What do we do with the house? And there's three. Most people would be thinking that there would be two. There's three. And that's the hard part. One, you don't keep it. You know you can't afford it. Two,
Right.
you can afford it. Or three, should I afford it? And that's hard. That third one's the hardest. Myself,
That
I went
is,
through
yeah.
divorce with my ex-husband. We co-parent. It was amicable, one of the most amicable divorces that you can kind of see. Of course, there's contention a little bit,
Mhm.
but when you start getting organized and you have that heart to heart conversation, am I going to buy you out? Can you afford to buy me out? Organization comes into it because it comes down to that third answer. Should I afford this? Or should I take a step back? Because emotionally, we want to keep the roof and the meals at the same table for the kids. That's hard and that's emotional. Pulls at your heartstrings. Can I keep them in the same school district? There's a lot of the questions that circle around that third one. Should
How
I?
how should how should how should people gauge if whether or not they should keep that property or not? Like, what do you usually ask, and what do you have people look for?
That's a great question. It's that organization of your finances. When I sit down with my clients and future clients, we go over their goals in life. And does that match up financially where they're at now? Because sometimes our heart says we want this because we want to keep the kids inside the house. Let's just say hypothetically there's kids in this scenario, because that's the one that tugs at the heartstrings, or
Yeah.
even your fur puppy, right? You want the backyard. That's hard to let go. So the big thing is getting organized and knowing the expectations and the goal of that individual. So if their goal is to not live in the area in 5 years, or if it is and they're rooted, okay, what does that look like? How much equity is inside the home? How do you split that? Are you guys on the same page? Are you on title? That's huge. I actually just ran into a client of mine who she's getting organized, going through the divorce procedure with her ex-husband. She's getting ready. They know that they want to sell the house. So when I pulled everything up, getting organized, turns out he didn't make a payment for 6 months. The house was in foreclosure and she had no knowledge of it.
Yeah,
So
that happens often. That happens
more
very,
than you
very
know.
often. I had somebody reach out, friend actually, really close friend of mine reached out and he goes, "Hey, I wanna sell my house. I'm gonna get divorced." And first of all, I felt terrible for him because I could see it in his face that it wasn't his decision. And then all of a sudden, it comes up that there's problems paying the mortgage. And when it came to actually sell the property, it affected how much money that they actually got back because, the bank wants their money. The bank wants their money, and both parties were out a lot. And then what do they do from there? It's like what decision has to become is like now we're since we had to sell, where are we going to move? Where are we going to live? And they were both displaced, unfortunately.
And that's where you come in. So let's keep the scenario going that they decide to sell the house. I need a net out sheet from you. And that's
Absolutely.
where I can start that organization of going, okay, so can you quickly explain what a net out sheet is? And then I can continue on.
Yeah, so whenever we're selling a property and whenever we're selling a property, we want to make sure that the owners of the property know what it is that they're getting in the end. So we take a net sheet and we ask them, "Hey, what's your mortgage balance?" We assume a range of what their property can potentially sell for, and then we list out the fees that are going to be associated with actually getting the property sold. So that's going to be agent commission, title fees, transfer stamps, any what is that property tax credits that are going to have to go to the buyer. We do our best to try to give them a general overall of what it's going to look like. And in the end, when you sell your house after these fees are accumulated, this is how much you should potentially see at the end of the sale. That is what a net sheet is.
Yeah, and that shows that net proceeds that come out. So let's just be hypothetical and say that because right now, statistically, it ranges between 40 and 60% of equity in homes. A lot of people have equity, and it's ranging right now from what I'm saying that they may have 40% equity to 60% equity at this stage in the game, depending on the age of the divorced couple. So let's just say
Yeah,
hypothetically that they have
and depending on how long they've been in the house, because sometimes people get
exactly.
divorced a year after buying, and then
Oh,
and
yeah.
you know what I mean? So that's the thing, but in your case, we're talking about somebody who's been there a while if they have that much equity.
Yeah, so let's just say there's 100,000 net proceeds. So after the house sells, so you have the purchase price minus the loan, minus the closing costs, minus the realtor um payouts, you get the net proceeds. And let's just say it's 100,000. And with your attorney, that's what you get to work out with. So we work with divorce attorneys very closely. I communicate and I write emails that include the realtor, that include the divorce attorney and my client. So that's huge, creating that team. So we're all in sync where we help each other out. So our client can get to that divorce decree and say, okay, there's 100, potentially 100,000, but we'll do 50-50. I always tell the divorce attorneys not to put a number to it, but do a mathematical equation, a sentence. And that's what I have them kind of write out like what a net out sheet is. After this, and this, and I say all liens because sometimes liens are caught that aren't supposed to be there from title. Then after the liens, it'll be a 50-50 split or 60-40, whatever you negotiate with your attorney. Then
Yeah,
I
sometimes I know that number is actually mandated by the court. The court might actually step in and say, "Take your net proceeds, but we want 20% here and 80% there." So sometimes the number is controlled by the court system. How often are you seeing divorces where it's court mandated to sell versus people saying, "Hey, we're gonna sell before it even gets to court?" What's the ratio for you?
So that what a great question that is, because that's heavy loaded. So right now I have a client who's selling the house and it's challenging because the gentleman does not want to sell and he won't leave, but he's not allowing showings to happen. So it's court. I know it's very tough. He unfortunately isn't working on helping selling the house because he's dragging his feet. So the court has come in now.
Oh yeah.
The wife intervened, got her attorney involved, and they're 100% divorced. But she needs her net proceeds to go buy another house. So we're at a
Oh yeah.
standstill. She's pre-approved until she gets. I mean, she's pre-approved as soon as she gets those net proceeds. But we have to sell the house. So the court has come in and now it's demanded that he now helps with showings because he keeps canceling showings.
That's
So
rough.
that it is. So that's where that communication between me, the divorce attorney, even though they're finally divorced, that having that relationship established, as well as my client needing to go purchase and knowing that her realtor is in the loop 100%. Again, we want our clients to feel comfortable. This is a really bad roller coaster if it goes negative. But I've seen it more so lately where the courts have come in and said, you have this date to sell the house. You have this date. And now they're putting dates on it. Like this one, for example, the client is a wife for me, and it's a husband that has not left the dwelling and is refusing showings, which is
Right.
tough. It's
Yeah.
really tough
That
on
is
this situation. But again, getting organized, at least she's lock and loaded. She knows what she can do. It's just a waiting game now because we got organized. Before she got divorced, she came to me and we went through her finances. We broke down her finances. I know her goals, and her children are more adult children. They're 19, 20, 22 area. So she actually wants to downsize to a condo. So now I know she doesn't want to move from the same style house in the same neighborhood. She doesn't need that. So now it's wide open. But again, it comes down to those goals and now the organization. So we got her organized, we got her pre-approved, everything's set. We just need the home to sell. But that organization going into divorce, that's the hardest thing. And she knew that she could have kept that house, but she chose not to. Financially speaking, she'll be farther ahead taking those net proceeds, paying it down, and she is now taking her house, her old house when it sells, and she's going to utilize this and diversify her funds. She's putting some of the net proceeds down on the house, and then she's actually contacted her financial planner and is diversifying, which
right.
is
And so
fantastic.
so she's paying off some bills and she's
Nope,
investing maybe in other places.
nope, she's just investing in other places. So
Okay,
she's,
okay.
yep, so
Yeah, for
she's,
some people they'll have to pay their bills for sure, but in your
oh,
case,
yes.
your clients is able to make that money grow, which is fantastic.
And that's where that mathematical sentence comes down. And that's why I work with a lot of divorce attorneys. Mathematically speaking, not a number of what the net proceeds are, because even though there's net proceeds, that mathematical sentence continues in a divorce decree. So whatever the house comes down to, you get the net proceeds minus marital debt equals this. And then there's a split. That can
Ah,
happen
okay.
too. So it gets deeper, and that's why being in communication with a mortgage specialist who knows this is
Yeah.
important. And how does this look like? And then we go deeper. Child
Yeah,
support,
I
buying a
can see
house.
I work with several lenders all year, all the time. And I think you are one of the first lenders that I've spoken to who actually understands, like probably can understand an email that's getting sent over from the attorney that came from the divorce attorney that has the jargon in it, that has the requirements that are coming down from the state or whoever's processing the divorce, to where it makes sense, where I can see the benefit that number one, you've had firsthand experience, and you've already helped a couple of people through using the mathematical equations that you're speaking from. um I can see where you would probably handle it better than a lender that's just like, oh, they're getting divorced, they have to sell. Yeah, let me know where you need to send the money. It's a little bit more than that. It's definitely a little bit more than that.
And it's emotional for clients, so why not have that human aspect? The one thing after talking with you, you seem very family oriented and you care about your friends, your family, and your clients. It seems like your clients turn into your friends and your family. That's how it
Oh
is
yeah.
with me. They You're with me. My job does not end at the closing table, and neither does it for you. We don't end there. We continue. So the moment you have questions, I get called all the time. Is this spam? Or what is this with the taxes? Or hey, my sister's going through A, B, and C. She's about to go through divorce, or my mom wants to downsize. We become that specialist for them. And to know that human interaction and to be able to have that conversation with your divorce attorney or another attorney. Yes, I can write emails. I've written emails that have gone in front of the judge, and my stuff has been presented to the judge saying my client cannot afford and is not approved. And I've had to write that they are not approved until we have these net proceeds. They are homeless until this house sells, which would help push the sale of the house. And then that's when the courts can intervene if there's a high conflict spouse involved. So
Wow.
yes, it's
Wow.
important to know your craft. And when I say craft, the guidelines of
Yeah.
mortgages and that human aspect and being partners with you and other realtors, that's important as well to make sure we have a community and we circle them with that expertise.
Absolutely. So I mean, it works regardless of what side is representing. If, whoever's whichever spouse is calling saying, "Hey, we got to sell," and now I have to go and get another loan now so that I can go and move on with my life. If anything was to get in the way where there's a situation where one of the spouses isn't allowing showings, isn't, and the process going down, and you know exactly what to say and what to recommend more than anything. I think the being able to recommend and without being a real estate attorney and having that matter of fact information, like, well, actually, the way it's dealt with in my experience is here you go, is worth it to a lot of people because ChatGPT is cool, Google's cool, YouTube is cool, but being able to call CC and be like, "Hey, CC, I saw you on YouTube. This is what's going on with my
Yeah.
spouse. What should we do?" I think whatever answer you give is probably going to be pretty valid, pretty valid.
Yeah, I've been around the block. I have had quite a few closings that are divorce, and some divorces are really nasty. Some can be good. You have the
Yeah.
spectrum of both. So being able to talk to individuals, one of my now she's a friend. She was a client. It was unfortunately financial abuse,
Mm,
and
yeah.
she knew none of her bills. And so she finally pulled the plug and left the situation, but left the situation scared. And she knew nothing. She had no password. She had nothing. So I had to write her a very detailed email saying, I need to see all bills. I need this, this, and this to get you pre approved. I didn't need electric bills. I did not need gas bills,
Yeah, you
but
needed the visa.
I just needed to know, and she needed to see the bills, and he provided everything because he thought he was trying to be the hero. I don't know the dynamic, but because of
Yeah.
my email, she was able to see, and he provided a whole list of what their bills actually were. And I just sat on the phone with her while she cried because that was the first time she's ever seen it. But he sent it to
Wow.
me because, well, for one, we had a what you said about you and your spouse, me and my ex-husband, we worked together for a very long time, even when we were
Yeah.
divorced, that I would write an email underneath his email, and he was happy to comply with another male. He would not
Ah, I
comply
see.
with me.
Yeah,
So
okay, so
it
by
came
they were
down.
they it felt relative, so it opened them up to be like, "Okay, here's the information, I'm
Yes.
Superman." Yeah.
Well, but that's again just taking that extra inch, right? Taking
Yeah.
that extra step to help our client understand where she's at and understand what she just went through and just be human about it and just take that and make sure she felt comfortable because she felt very embarrassed. And the biggest word for me is shamed. She felt shameful. And how many times for me on my end, there's a lot of times that clients feel shame because their credit isn't the best, that I did not work good enough and I don't have the best credit. So that word shame really hits hard. And that's where there's a lot of first time home buyers who don't go out and buy because they haven't adulted right. Well, adulting is hard.
Oh
everywhere
yeah, it's
adulting
difficult.
is hard. I think you can agree with me,
Oh
adulting is
yeah.
hard.
Oh yeah,
I
adulting's
made a
difficult.
mis I made a mistake with my student loans back in the day. I didn't defer it the right way, and I had 11 trade lines be 60 days late. It took me years to get over 680, and I'm in this industry. Unfortunately, it takes time to heal, but it was shameful. Like, I am in this industry when I was young, and I still did it wrong because I filled out paperwork the wrong way. And so I will get those clients, and even during divorce or whomever, where they know that they made a mistake and they won't come talk with me. But to get them to open up and have that ability to calm them down, listen to them, again, treat them like friends and family, and be able to get that conversation going, then they become first time home buyers and then they become clients for such a long time.
Absolutely. Get right now that we're on the topic of helping people, and the example that you gave that somebody had to sell their house to buy a new one. Why don't we talk a little bit about what kind of program specifically you offer anybody who's going through a divorce, and maybe talk about, like the programs that you offer that everyone else who's not going through a divorce but is buying a house perhaps for the first time or just with you, period. Maybe it's their second go around. Maybe talk about portfolio loans. What does that look like for you?
So the one thing I'd like to touch on is what a lot of people don't know, and this will kind of go into a whole nother conversation. When you get divorced, you default to first time home buyer again. Many people don't know that.
Okay,
So
yeah,
and
wow, that's a good point.
so when you get a divorce and you have the divorce decree, you sell your assets and it shows that you're done, you both become a first time home buyer now. You don't have to put 5% down, 10% down, 20% down. You can actually default to that 3%. Now, sometimes you have much more money if you're going through divorce, or sometimes you don't have enough. Then you
Yeah.
become that first time home buyer and you get that rate cut. You get all those
So is that
benefits of being
do
a
they
first
get
time home buyer.
do they get access to VHA or VHA FHA again? Is that what it is?
Yes.
Okay, so the 3.5% FHA, they get to do that.
So they
One more
become first
time.
time home buyers by default, which is
Nice.
huge. Um, Now with the programs, if you fall under that, that helps, and it helps reduce the rate a little bit because you get a little bump, which is good. We're all waiting for the Federal Reserve to drop the rates even more. I
Yeah.
call I I call Powell Fed Daddy.
That's
I always
hilarious.
I make fun of him. I'm like, Fed Daddy is going,
Fed Daddy.
Fed Daddy.
I'm waiting for Fed Daddy. That's awesome.
Oh, yeah, Fed Daddy to lower. But
Yeah, yeah,
here's the
yeah.
thing, and with that being said, it is confusing when the Federal Reserve comes out and says we're dropping the rates by a quarter. That's not mortgages. That's bank loans, car loans. That hits different. We're tied to the 10-year treasury. And we have not dropped as much as we wanted to. And I hate the word drop. Let's use the word decline. Rates have not declined where we really want them to be, and we're holding steady in a really interesting bracket of rate. So, and I don't want to quote rates because that's hard depending on the
Yeah.
formula and where someone's at.
They change daily. They change daily. So,
Oh, our rate sheets change. I've had them change 15 times in one day, and we're like,
oh my goodness.
yeah, I've
That's
seen it.
interesting.
I've seen it bounce. But when you're a first time home buyer, you get a little bit of a break. Then if you only put 3% down, that mortgage insurance is cheaper for first time home buyers. So
Yep.
divorce and first time home buyers, they get to take that as an advantage to help them out, which is
So,
fantastic.
so I wanna kind of stop you there for a second. So you mentioned mortgage insurance.
Yes.
Can you explain what mortgage insurance is for people who are buying for the first time perhaps, or who
So
bought before but just forgot what it was?
so it's private mortgage insurance. And basically, I'm going to keep it as layman's as possible. This insurance is not for you. This is for the bank to ensure the bank that they get paid back. So it's an extra fee monthly that you pay to the bank to ensure that you're not going to default. So if you default, they've made some extra money on you. It has nothing to do with protecting the property. That is completely separate. So, trying to keep it as simple as possible, that's what I would say it is. That if you have the opportunity to put down money, in order not to have mortgage insurance, you have to put down 20%. Now, as a first time home buyer, it's 3%. So that's where that myth comes in. You need 20% to put down on a house. Well, that myth is there because it's so true that you don't have the mortgage insurance, right? But not everybody can afford to put 20% down. But here's a
Right.
cool thing. I don't want everybody to get scared about that because there is a scale. If you put 3% down, I'm just going to throw out a hypothetical number. Let's say that the loan amount is 250,000. At 250,000, you put 3% down, maybe that more depending on your credit score, let's just say hypothetically it's $147. But the more you put down, the less it becomes. It could if you put 15% down, then maybe it's only $47 a month. If you put
There you go.
10% down, maybe it's $87 a month. So the scale varies, and that's where coming to a loan specialist and really working out those numbers and having the transparency of closing numbers is huge. Again, you're going to hear me say the same thing: organization, organization, organization. And the transparency of numbers is huge. You need to talk to a loan officer. If it's not me, that is okay. But when you have a trusted loan officer, ask for all the numbers, the closing costs, the monthly payment. And the next big thing is what those taxes are going to be like when they cap a year later. Look at that number. Can you afford that house a year from now? What does that look like? Depending on the market that you're in. Some states have it, some states don't have it. The state that I'm in, it does change after you purchase a house. The taxes, the property taxes, will regulate to what that purchase price was. So
Yeah,
it's
yeah,
very important to know the numbers, but that mortgage insurance can change.
absolutely,
And it's
absolutely.
important to know those numbers,
No,
but it's
no,
not
it's
for
you
us.
have to you have to let people know, the whole shebang. You got to let people know the entirety of it before they sign on the dotted line, so that they know what they're getting themselves into. And I'm glad that you're thorough. It sounds like you're very thorough with the process, which is fantastic. As far as your offerings, I know we do FHA. Obviously, I'm sure you do conventional. What does any down payment assistance or first time home buyer programs? What does that look like for anybody that's going through cross country mortgage?
Well, for cross country mortgage, it's a very simple process. We talk to the client again, know what their goals are, but we have the down payment assistance. We do have mishta. So if there's someone who does need down payment assistance that actually doesn't have high assets in their bank account and they're first time home buyers, we do have that. Also, what's really cool is our company allows you to stack, and let me explain what that is.
Really,
So
really
for
quick, when you mentioned
yes.
Mishta, is that specific to your state, or is that a program that anybody can get anywhere because it's with cross country?
No, it's actually specific to the state and their funding.
Okay, okay, so
Yes.
so to Michigan. Okay,
So for us here, we have a program called Mishta that we are able to give $7,500. The state does, but it's not forgivable. You have to pay it back when you
right.
refinance or when you sell. It's not a forgivable down payment assistance. So I'm I have done one or two and I know it, but
Yeah,
I'm not if you don't have to be in it, I say save your money and put
yeah,
equity into the home. Because if you're in Mishta, again, nothing wrong with that program. It's for people, but you're kind of going into negative equity. So you got to be
I
super
gotcha.
careful.
Yeah, the same
So it's
thing
a
with IDA. We have IDA in Illinois, and then there's a
okay.
form of IDA in Indiana. You have repayable, forgivable, and yeah, every one of those programs has its benefits and has its ups and its downs, and you just have to have a good conversation with the lender in order to figure out of whether or not that that's right for you. And I have a feeling that if they talk to you about it, you're going to point them in the right direction.
Oh, absolutely. And every state has its own thing. And some cities, I'd love to point out, some cities actually have their own down payment assistance. So it actually, if you live in a high populated metropolitan area, check into your city, Atlanta, Detroit, Chicago, see if they have anything going on. For example, Detroit, I think they're getting funded soon where there's going to be $12,000 given to anybody who's moving into Detroit to help rehab a house because they're trying to create more people coming in the city. So I would encourage you and anybody who's watching, not just the state, but check with your city to see if there is a program that would help out that you don't have to pay it back.
Absolutely. I want to point something out for all of you that are watching right now. And you're watching from my channel. If you go to the link that's in my bio, whether it's YouTube, Facebook, TikTok, Instagram, LinkedIn, when you click it, I actually have a free ebook that pertains to Illinois and Wisconsin. And of course, you have to have interest in Illinois and Wisconsin. But if you download it and you read it, I have about 8 down payment assistance programs that you can read through, and all you got to do is go through, look them up on Google, do a little bit of your own research, of course, but you can take those, and then depending on which lender you speak to, you can say, hey, listen, I downloaded this ebook, I saw this payment program, can you do me a favor and sort this out for me and figure out if whether or not I can, I can do it or not. Now, if you're not in Detroit, if you're not in Illinois, if you're not in Wisconsin, let's say you're in Texas, California, Nevada, of course, ChatGPT, Google, they're going to pull those programs up. They'll pull them up by county, by state. Some of them will require you to pay back. Some of them will require you to stay in the house for 10, 20, 10 years, 2 years, 5 years. Some of them will have higher interest rates, be a second mortgage. There's stipulations on all these programs. But at the end of the day, if you talk to somebody like Cece, she can sort out all of that and just let you know what you're getting yourself into before you actually put yourself through the ringer, you know what I mean?
Yeah, and we can stack. So we can work with those programs, we can work with those agencies that are offering assistance or even offering uh down payment or rehab loan that would help out or even assist where let's say that the city itself after you close and you show with your closing disclosures, we my team have been able to extract that closing disclosure and send it to the right agency so that they can see you actually close on that property within their city and help you apply for that too. Now we can't apply for you, but we can submit the document showing that we've officially closed. And again, that comes to that teamwork, right? So wherever you're at, it's good to reach out to me. It's good to reach out to your team and have that open conversation, but definitely send a DM through this video. Make sure you click that link and read up on it because again, organization, that will get you the farthest.
Absolutely. CC, I think probably we're good there. For anybody that wants to contact you, I'm going to give you an opportunity to kind of like just give us all your social medias, give us your phone number. What's the best way to contact you? How do people get in contact with CC over at Cross Country Mortgage?
So a lot of my social handles are Let's Talk Mortgages with CC. So I'm on TikTok, Facebook, YouTube. I know I have to upload more to YouTube. I have a lot in my drafts right now. But yeah, it's Let's Talk Mortgages. After you post this, I'll put this in the comments. So hopefully in the comments, I'll be able to comment where you can find me. My phone number, I work from my cell phone number. I don't have a brick and well, I'm here my brick and mortar, but I don't have an office number because I do believe in that human interaction. But the phone number is quickly 586-914-2291, and I'm on
Perfect.
Eastern Standard Time.
Perfect. I'm on Central, and we learned that the hard way earlier,
I
right?
know, right? Right?
Yeah.
But that's
Yeah.
okay. We made it work, and it gave me more
No,
time.
no, I appreciate you coming in here and being my divorce specialist when it comes to to mortgage loans, and I'm sure a lot of people watching probably got a ton of information out of it. And if you guys are in the Detroit area, or, or Chicago or Indiana, you wanna get in
Yeah.
contact with us, you just got her number. Mine's is, 708-205-7121. If you go to the comments section in this video, I'm going to pin a comment that's gonna have my information. I'll make sure Cece's phone number is in that pin in the comment as well. But again, you could also go to the link in my bio to reach out to me, schedule an appointment, and then, through this video, of course, let's get you over to CC if you feel that that applies to you. And, good times, Miss Cece, good times.
Yeah, well, thank you for having me. I really appreciate it.
No, this was a ton of fun, Cece. I really appreciate you, and thank you so much.
Yeah, absolutely.
Take care.